Attention Bitcoin holders, this chart screams warning, but there could be some hidden good news. Welcome in. If you're new here, welcome in. My name is Steve. Do you want to have less stress and more success? Hit that subscribe button right now, destroy it, hit that thumbs up button, turn on notifications, less stress, more success, hit that subscribe button. Also, if you want to be involved in our $100 Bitcoin giveaway, leave a thumbs up on this video and make sure you do all those things. 5,000 likes, we will pick 2 winners. Let's jump straight into the video. Buckle up. Buckle up. This video is going to be a wild ride. I'm going to introduce you to a theory that I'm looking into that is based on the facts and the charts. This will be a different perspective. This will kind of put things in its place, and it'll be a new perspective of the charts that you haven't seen yet. What do you have in front of you? You have the Bitcoin log growth curves. These are very, very powerful because they're based on the Fibonacci sequence. We've covered this for many, many months, and just a 10-second summary. What you notice is once you get above this median line, the 50% level in the fib, it's only a couple months before you reach the pinnacle market cycle top, which usually results in an extended bear market for at least a year. You can see once we reach the top here, once we crossed this green line here in 2013, it was only a handful of months before we reached our pinnacle market cycle top, heading into a long extended bear market. And same thing in 2017. Once we crossed this green line, it was only a couple months before we reached our top. But today we're taking a very different look at this chart. We're a very different perspective. And there's kind of 1, 2, 3 scenarios that we're looking at, but we're mainly looking at this sequence here. And this is where I want you to buckle up because things are about to get very, very interesting. What we're noticing is we want to compare 2013 to today, right? Are you with me so far? So what we're looking at first is peel your eyes to the bottom, right? We have this bottom level here, this area in yellow. This represents our support. Through Bitcoin's entire history, this has represented our support. But what is very interesting is when we start to move away from that support. Back here in 2013, it was only a couple candles before we reached the green being that main median line that we're looking into. You can see here it's just a couple months until we reached here. Same with present day, meaning that this was a very strong move, quick move, rapid move to our median line that was met with resistance. What happened present day? We finally got away from that the yellow line that was representing our support. And it was only a couple months until we got up to this green line holding some resistance, meaning it was really strong. Not like back here where it was 7, 8, 10 months for us to reach. It was quick and seamless back here in 2013 and the same in 2017. But this is where things start to get even more interesting because when we approached this green line, our median line, the 50% level of the fib, back here in 2013, this candle actually represented our new all-time high. Why is that important? You just look left and you can see our all-time high here. This was the candle that made a new all-time high. That same candle approached the green. Are you with me so far? Because when we fast forward and we look to present day, this candle in December of 2020 was the candle that we were met with resistance from the green. And it was also the candle that made our new all-time high. Do you sense a pattern so far? Quick move from the bottom, candle approaching resistance, candle represents new all-time high. Same in 2020, fast move, approaching resistance, candle that meets resistance represents our new all-time high. But this is where things really take a turn. And this is where things really, really start to get interesting. Because what happened back here is we were met with that resistance, and then we were met with a very new resistance. And a resistance that really propelled prices in the opposite direction. Because in this point, when we finally breached that 50% fib level here that's represented in the green, the market started to react very, very strongly. Meaning there was so much bullish momentum that prices really started to take off. And we actually reached not one, but two fib levels above the median line, which represents the 76.39. Okay? Those of you that are keeping score at home, this we've highlighted it in red. That's the 76.39. Right? The reason why that's important is there was so much bullish momentum. There was so much emotion heading into this. Prices really rose dramatically, but then we were met with heavy resistance at this second level here. You can see this wick, okay? So we breached the 50%, we moved incredibly bullish quickly to this level, and then we were met with heavy resistance. We had a complete flush out of the market. We had a rejuvenation of the market. We were building structure, and this was needed, right? Why is that important? Look at what we just did. What line did we just go to? What line are we creating heavy wicks from? What line are we approaching here? This is the 7639. This is the 7639. So what happened present day? We have such a bullish momentum off of this yellow line. We had a strong resistance into the 50%. We moved above the 50%, and then we're getting rejected right at this 7639, which is what we did before. We've never had a problem with it previously because this move, it moved a lot slower. We were able to build so much market structure through this move. Not present day. This move moved significantly faster. It had a lot more bullish momentum, but we're getting heavy resistance from the 7639, which is the exact same scenario that we were met with back in 2013. This is why I'm telling you to buckle up. The market needed this flush out in 2013. We were far overextended. We couldn't proceed to move at that rapid speed without a healthy pullback and a flush out of the market and to build healthy structure to have a move forward. This took 7 months from the time we breached this level here until our market cycle top. We're now completing month 2. We're completing month 2 here in 5 days from now. Okay, this is where it gets really exciting. Now your question becomes, okay, if we were to repeat this, how does it play out? Because this is where we had a 77% correction. But if we're looking at just the fib levels, there's some clear-cut signs as to how this is going to play out. Now this is where I want you to buckle up because it's going to get very interesting. I want to share with you one thing first. There's a lot of information out there in the crypto space. You come here to learn more. I've consolidated everything you need to know into a simple and easy course, and I'm giving it away for free. Go to cryptocrewuniversity.com and click right here. It'll take you 3 seconds. This will help you tremendously. Go get this if you haven't done so already. cryptocrewuniversity.com, click right here. The link is also below. Now, back to the juicy part. How does this react, right? If we were to repeat something similar, because we've done it so far, right? We've had a ton of time spent at this bottom channel here, representing our support. We moved up to this 50% level, we breached it, and we got rejected from this 7639. If we were to do something similar, what we did was we got heavy resistance from the 7639, and we actually breached down back through this 50% level and all the way down to our first fib level. This is where we got some support. So if we were to do something similar, again, keep in mind that these levels are moving up every day. Tomorrow, they will be higher than this. Same with the next day, same with the next day, same with next week. So this is the levels just right now, so that you can get an idea of how this could play out if we were to continue to repeat this pattern. And this is how it would look. You have the 50% level right now at about 38,000. Keep in mind, that's rising every day. The first fib level below that right now, currently, is 31. What's really interesting is that in this structure that we created back here in 2013, when we got rejected and we created our new low here, it was higher than our previous all-time high. That's the key. It's not like we moved back down and even held support at our previous all-time high. We didn't even reach our previous all-time high. Okay, that's the key. But what we did do is we held support at our first fib level. You can see each body of these monthly candles held support. We did have a wick through here, almost touching the second fib on the lower level of the 50%. Not quite, but the key is it was higher than our previous all-time high. So if we take that scenario and just look at the structure, it's telling us, hey, we could potentially fall all the way to this level, which right now is at 30,000. You may say, Steve, there's no way in hell. This is a theory, okay? And again, you have to look at the facts and the charts, and this is something that people are not prepared for, is if we played out to a similar scenario to 2013, how could it look? It looks as though this 30K level will hold as support. Again, this level is for the bodies of the candles, and again, is rising every day. But I wanted to paint a picture, okay? Everyone is going to call for the moon and $250,000 by next week and all these crazy prices. In this channel, we keep it realistic just based on the facts. There's no way for you to argue that we haven't had similarities to 2013 with the structure I've just presented. We can't argue against it. You have to understand it. As a disciplined trader, you need to understand both sides of the coin. You have to, and when you do, you'll make much better decisions. So, does this mean to wait for 30,000? No, you could be waiting forever. This means that we're going to pay attention to the structure because this is something that's really catching my eye. And again, we're in the very beginning stages of it. You know, could we blast through this fib level next month? Absolutely. But it's something that we need to understand. We need to keep our eye on, and we're going to be keeping you up to date because this thing could get very interesting. Okay, so if you want to learn more about what's happened in this recent move, we did a full video on it right here that people are loving, and the reason is a lot of these things that we really discussed for the past month to 2 months are really playing out. Okay, so watch this video here. I'll paste it right here. If you really want a full in-depth analysis with about 4 or 5 charts that you've got to watch right now for the short term for Bitcoin, this is it. And this video also tells you when prices will turn around and start heading back to the moon. Okay, so Bitcoin warning, what they're not telling you about this dump. I'll link it up here. Make sure you watch that. And if you're relatively new and you haven't done so already and you want less stress and more success, hit that subscribe button, turn on that bell, hit the like button. You need to hit the like button and do all of those things if you want to be involved with our $100 Bitcoin giveaway. 5,000 likes. We're going to pick 2 winners. 2 winners. Let's get this video to 5,000 likes. And if you want to be involved in the Bitcoin giveaway, this is all you need to do. Subscribe, bell, like, which we just described. Get your free course right here, cryptocrewuniversity.com, which you've already done. If you haven't done so already, go get that right now. And follow on the Twitters, CryptoCrewU on the Twitters, CryptoCrewU, and then comment your favorite thing about this channel, Bitcoin address in my name. Simple as that. And then you're involved in the drawing. We'll pick the drawing on another winner tomorrow, hopefully 2. If we get 5,000 likes on this video. Hope you enjoy. We'll be keeping you up to date all through this hectic area here. But again, take a deep breath. Everything is going to be just fine. Peace and love to the fellow underdogs.